Alright guys, back for the next stock analysis. Got a nice little $50 deposit in the small account for the week and trying to figure out where to put it. So this time I'm going to diversify a little bit and do a Trump play and really just a US play in general. I have two companies pulled up here and I have their forecast showing where you can see their projected growth over the next couple of years. The bear case, meaning the bad case, is very small for both of these companies. So the first one is Nucor, which is one of the best slash largest U.S. steel production companies in the United States. Here, I'll just read the overview for you. Nucor engages in the manufacture of steel products and ferrous and non-ferrous materials. It operates through the following segments: steel mills, steel products, and raw materials, blah, blah, blah. You get the point. Okay, so this is a steel company and raw materials, and with Trump imposing the tariffs like he did before, we should see a pretty good pump. Interesting thing to point out here. Everybody's all against Trump's tariffs, but I want you guys to look at this data. This is why you gotta just like tune the news out sometimes and just go look at the data. More trade war tariffs have been collected under Biden than Trump. So y'all are like afraid of tariffs on the left, but clearly they've been doing it. Just because they don't talk about it all the time doesn't mean they're not practicing it. And the reason they did it is because what Trump did was proven to work, and you can see in the charts here how that was working out, right? So like this is where it really started, right here. First year of it, and then this is across the presidency. The presidency where this new tariff action was the norm, right? Like the U.S. steel industry, Nucor, just took off, right? So, you know, just like any other investment, there's risk here, but I think Trump's future policies will promote steel production in the United States and hopefully make us export more steel and bring more steel revenue into the industry. So also, if you look at 5 years, so going back to 2020 to now, these guys have been pretty consistently growing. I mean, there's obviously a lot of volatility over months, but we're actually at a pretty low level here for the last year. And we had a high in April and it kind of came down. But I want to show you something really interesting. So if we switch over to the daily chart, let me go to the election day. Look at this huge gap up. Doesn't look huge because my chart's not that big, but we gapped up from 145 all the way to 170.88, which is a let's just go from the bottom of that day to the top of that day. About a 20% increase in the price in a single day, okay? And then obviously it corrected because, these policies, no policies are in place yet, but this was a trigger pull response to Trump winning, right? So this stock really likes him winning. Like it's in favor of that you can see it in the charts. Doesn't matter how you feel, this is what the data says. So, and now we've gotten a correction and we're starting to climb steady. So I am going to put a little bit of money into these guys, and I will be continuing to average into these guys in a small manner over the next couple of years because, well, Trump's in office and this is a Trump play. I mean, it just makes sense. And you can see where the highs were in April. Like, it has the potential to get pretty high, especially if it just corrects this and then continues to grow. And then you couple that with the forecast for this thing. It just looks great. I mean, we're talking about potentially a 55% growth in a year, according to analysts, so that's pretty good. The fundamentals look good, besides they had one quarter that wasn't great, which is right here. And guess what? That's when the price fell, right? Right at the end of Q1, so that aligns, that makes sense, that's what that correction's from. But then they've beat ever since. So just barely, they were like right there on that one. But for the most part, they've had good financials, and then they are, it's a little spotty. I'm not gonna lie to you guys, but see, that's so macroeconomically controlled. Like if there's policy that's changing, or we're importing more steel from China, then of course they're not going to have as good a month. So this is definitely a geopolitical play. This is something that I'm taking a leap of faith on, based on who's president for the next 4 years more than anything here, and the potential growth of it, coupled with the fact that it's down from its all-time highs pretty significantly. And then also that trigger response from the election. So that's what we're doing with this guy. So next I want to talk about Trimble. This is the same type of play, except this is different sector. So these guys engage in provision of positioning technology solutions that operates through the following segments: buildings and infrastructure, geospatial resources and utilities, blah 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 blah. And basically this is a play on the industrial sector in the same way that we're doing with steel. And if we go ahead and we look at Trimble, they're not so cheap right now. They're actually trying to push through some resistance right now. So this could come back down a little bit, but over the long term should do pretty good. And I mean, just look how it benefited from those policy changes on tariffs over 2020. I mean, good God, dude. Just exploded. And it seems like we're seeing that same type of action again based on Trump's policies. So this could really benefit from him. It is a little expensive right now, but based on this trajectory, I'm not worried about it at all. We do have a gap that's probably going to have to get filled right here, so maybe wait. But again, I'm averaging into this with such a small amount of money, I don't really care. Look at the growth over 5 years. Okay. Look how bad it did through the Biden administration, right? Just all the way down the whole time, because U.S. industry did terrible. Our economy is awful from the last administration. Like, U.S. based companies really struggled, and then look how they did over the Trump presidency. Let me pull up a different view here. Change this to a 1 year again. Alright. Trump, not a great year. Trump, it just kind of stayed, I guess, that year. Stayed this year. Last year, Trump, going into, this is January of 21, okay? So this is when office changed. Look what happened. You know, like, it just came down. Do I got this right? Yeah. Trump. Well, actually, this would be Trump, right? So Trump year, end of Trump year, Biden. So this is a Biden, right? Like, Biden took office here, and then down, and then this year we're coming back up because inflation's gotten a little bit under control, and we're seeing a lot of the quantitative tightening come to an end. That is part of it too, right? Like, just the money, M2 money supply. So we're seeing stimulus come back into the economy along with his policies that should do well for U.S. general industry. So, I mean, you can tell from the way I'm talking about this, I don't know a ton about these companies personally. I just know they're strong companies in this sector, and I'm trying to buy U.S.-based stocks in these sectors. And I'm looking at the forecast from analysts. Like, there is no downside on this one, which is crazy, right? And then this one has a very minimal downside case. with a projection of potentially 55%, but an average consensus of 12%, and the other one has an average consensus of 10%. So just this is over 1 year, right? We're talking about 4 years, so so we'll go ahead and check in on how these are doing. This was up all weekend, but I think we're back to about break even. Yeah, down 4 cents. I mean, I barely have any money in there, so Bitcoin's having a huge correction, which we knew that was coming, and Ethereum is doing exactly what I thought it was going to do since the last video. So doing real good there. That's why I put a bunch of money in that play, but I know I haven't talked about that play on the channel because it's in the past. I mean, in my opinion, you guys missed the accumulation phase on Ethereum. You can still buy it, you can still make money, but your risk to reward is a lot worse than mine would be. So, and I can show maybe in a different video like how cheap I got this, because I have 200,000 roughly in ETH, not the crypto, but the Grayscale Mini ETF on my Roth account. So yeah, and I got that at an average of, I think Ethereum was at like 2.2 or 2.3, so I'm up massively on that, and I'm expecting Ethereum to hit like a minimum of 10,000 in the next year. So it's still not a bad time to buy it, to be honest, but if you don't understand how crypto cycles work, you have to be careful because this is a swing trade. So anyways, so we're going to go to Nucor, right? And we're going to drop a little bit of money into these guys. I mean, just look at that spike on the election. Freaking awesome. Yeah, so we're going to put, how much we got? I think we got $50. Yep, $50. So we're going to buy 25 bucks of Nucor. Oh, not shares, sorry, dollars. 25 shares for $25. Oh my gosh, sorry guys. Review order. Buy that. Okay. We're going to hold that for a while. So expanding our portfolio just a bit. Did it go through? It did. Okay. So we're going to buy them, and then I think I'm actually going to add to my Broadcom position from the last video, because since we're still down, I can still get it with that same analysis. So we're going to go ahead and spend $25 more on Broadcom today, because I like the AI play a lot more than the steel industry. Slightly biased, but AI is going to have some explosive growth compared to steel. That's just the truth of it. So go ahead and buy some of that. Alright, and our $50 is spent. Oh, one more thing before I let you guys go. I did want to say, when this plays out, when this is done, I plan on selling that and dispersing the money into different stocks and assets for the long term. I'll probably pull a little bit out just because it's Christmas time and I want to spoil my kid. Sue me. This is a cash account, so I have to pay taxes on it anyways. Yeah. But I just wanted to let you guys know, eventually, I expect this number to be, let me see. I'm going to try and sell most of it when we get around 10,000. That's what I'm expecting. I might sell a little at 8, but I'm anticipating we get at least 10K on ETH this cycle. You don't have to agree with me. That's just based on all the charting and analysis I've done. That's where I expect it to be and where the market cap could very realistically be based on where Bitcoin is sitting now. So with that said, if that was to play out, this would just slightly over triple. So I'd have almost 20,000 sitting in Ethereum. I'll probably pull half of that out and just give it to my wife and my daughter because I can. And then we'll have the other 10 grand to play with to actually like really start building out this portfolio in a real way, so it's not such a slow burn for you guys at $50 a month. I mean, I'm doing $50 a week. I'm doing $50 a week because I feel like that's a realistic amount of money that people can invest, uh, you know, no matter what their job is. But I do think, obviously, the more money you have in investments, the faster you can grow it, right? And I wanted to make it somewhat exciting for the channel, so I think starting with the 5 grand, 5, 6 grand, like we are, is not crazy. However, I would say, never, ever, ever, if you don't know what you're doing, should you dump like 100% of your portfolio into one asset. That's a really bad idea. This isn't my actual portfolio. So just keep that in mind, right? Like my Roth is a lot more diversified than this.